we're stuck in this amazing parallel that goes back to the COVID lows. And if you take a trend line from the COVID lows and connect it through the bear market of 2021, it literally tags the bottom of the liberation sell-off low. Now, if you drag a parallel up to the bull market highs of 2021, guess what? We now have a level where the markets are hitting on the S&P 500. And so what that tells us is that historically the major lows were pinpointed by this trend line. The parallel line to that marks the perfect bull market high of 2021, and we're now into it. We can surmise or use logic to deduct that we should see a big pullback off of this level. So that's just one of those. But I also think this round robin of money within AI continues to be a concern. We all have this lofty expectation that AI is going to essentially be this unlimited funding of the US GDP, right? We know that about 90% of the GDP right now of the US is due to capex spending here, while the rest of the economy is really struggling. And I think, again, there's a high risk of a hiccup in that AI trade. I actually think it's going to come from the lack of energy, right? We're hearing more and more about these nuclear plants that are going to take 5 to 7 years to build. And most of these data centers, there's no place to pull that energy needed for them. And so all of a sudden, you could be pushing out these gains on these AI stocks or the revenue and profit out literally 5 to 10 years, and the market's not pricing that in at all. And I think, again, these are issues where a rotation of capital becomes the most likely scenario in the near term into 2026, where we see money flowing into PE ratio stocks trading 8 or 9 at this point, and ultimately the AI trade starting to stumble, bringing the stock market down.